Hey, what's up, stock compounders? Brad here. So it is Friday. So we're going to talk about the 10 most popular stocks on the Robinhood investing platform. What are these millennial investors buying? Okay. So here's the top 10. Now, the first two are far and away the most popular stocks in the last week. We've got Moderna and Tesla. Okay. Tesla has just been in every news piece that I'm seeing across my computer in the last week. It is just crazy, this stampede of people that are moving towards Tesla right now. But let's go through these one at a time. So Moderna, it's kind of a vaccine play. Reasonable size company, $36.9 billion in market cap. And just a reminder, market cap is the number of shares outstanding, the number of equity or stock shares outstanding, times the price of those shares. So it's the market capitalization of the company. So 36.9 billion, that is a sizable company. Now, these columns are very important here. Price to earnings ratio. That tells you how cheap a business is, how much earnings you're going to get. It's essentially earnings in the last year compared to what the price of a stock is today. So earnings, price per share divided by earnings per share. So the higher the price to earnings ratio, the more you're paying for kind of the same amount of earnings, okay? So if you buy Amazon at 143, versus Apple at 30, you're paying almost 5 times as much for the earnings of Amazon than you are for Apple. So built into that is an assumption that there's still massive growth ahead in Amazon, which is kind of crazy. I mean, Amazon, it's been around for more than 20 years. So it's quite shocking to see how high the price to earnings ratio is even after being around for 20 years and being one of the biggest companies in the US right now at a 1.48 trillion market cap. So let's quick go through these columns. Price to earnings, it's a measure of how cheap a company is. It's the inverse of earnings yield, okay? Earnings yield and return on invested capital are two metrics that Joel Greenblatt uses in his magic formula. And I'm a big fan of the magic formula investing approach, which is really detailed in the little book that beats the market by Joel Greenblatt. An earnings yield, measure of how cheap a business is. Return on invested capital is a measure of how good a business is. And this is something he picked up from Warren Buffett. The magic sauce is when you combine businesses that are both cheap and good. Okay, so that's a measure of those things. Super investors. This is one of the biggest hacks in investing, to only buy companies that a super investor has put real money down on. Okay. So these super investors are voting with their dollars, and they're fantastic investors. They're investors that have been able to compound capital for decades. So they have a ton of experience as investors. And so when one of these people puts money down on a stock, it's an indication to me that that's going to be a much safer investment than, say, a company where a super investor hasn't voted for that investment with their dollars. Of course, you need to know roughly the price that was paid for that stock, because a great business, a great stock is not a great stock at any price. Okay, the price you pay determines, what your returns are going to be going into the future. So this is an incredibly important column. How many super investors own this stock? And then we got VIC, Value Investors Club. So this is a website that was created by Joel Greenblatt, And it's really a community of investors where investors submit investment ideas, and those ideas are rigorously evaluated, and only the best investment ideas, rigorously explained, make it through. So we get to see, these write-ups in terms of, so for example, in August of 2019, there was a write-up for Tesla stock. And at that time, the price was at $234. And this investor said, it's a good time to buy Tesla. I think it's going to go up substantially from here. And clearly it did. It was $234 less than a year ago. Right now we're sitting right around $1,500. So that's more than a 6x, okay, in less than a year. That's insane. That's the kind of ride you sign up for when you climb aboard Tesla, both on the upside and potentially on the downside. So that's Value Investors Club. If you're considering buying a stock, definitely check to see if there's a write-up on Value Investors Club. It's free. There is a little bit of a lag, maybe like a month and a half lag from when new write-ups are submitted to when you can see them, unless you're a member of the community, which I think involves submitting at least one investment idea each year that gets kind of approved. But anyway, even with that lag, it's a fantastic resource. And then description, just generally what the company does. So Moderna, like I said, a play on the vaccines. Now, there's just no boxes checked here for me to be interested in looking further at Moderna. So we're just going to jump right to the next one. Tesla, $278 billion market cap. I believe it's the highest market cap of any auto company right now, which is just kind of mind-boggling. Price at $1,500. There is one super investor who owns Tesla. He bought it in the first quarter of 2020. Okay, so sometime between January 1st and March 31st, he added that position. Like I said, there's a write-up, $234. As a value investor, one of the things that I avoid in investing is when there's a ton of buzz around a company, when there's a ton of investors piling in, it's highly likely that the price of that stock is too expensive, okay, compared to the value of the stock, based on what the business is doing. Now, back in January, Aswath Damodaran, who's a professor at NYU, sometimes called the Dean of Business Valuation, he did a valuation for Tesla in January, and he came up with around, I think it was $427 per share, was his kind of fair value estimate for Tesla stock. Again, that was 7 months ago, but definitely check that out if you're thinking about buying Tesla. He also created a video with a do-it-yourself valuation of Tesla. So, of course, his valuation is based on his assumptions about Tesla and what's going to happen in the future. But you can bring your own assumptions to that do-it-yourself valuation and come up with, what a reasonable valuation is based on your assumptions for Tesla. So I'd love to own Tesla, not at $1,500, probably closer to $300 or $400. So, kind of hoping it gets back into that range. If it doesn't, there's plenty of other things to invest in. I'm not emotionally attached to owning Tesla at some point. I do hope they succeed as a business. I love what they're doing in terms of shifting the transportation industry away from fossil fuels into more of a renewable energy. Riggle is a clinical stage biotech company. I think they're also working on vaccines. You can see here, It's a small company, 500 million market cap. That's pretty small. Doesn't check any boxes here. So again, I'm out. Netflix. This is the first time I've seen Netflix in the Robinhood top 10 since I've done this for the last couple of months. It's a pretty high price to earnings ratio. Gives an earnings yield of 1.2%. That's nowhere near where I need to be interested in this company. It's simply too expensive. There are 5 super investors who own it. There's a write-up from September of 2019, a little less than a year ago. It was $295 per share. Now it's $492. So it's gone up significantly in the last year. In my opinion, overpriced. Amazon. This has shown up, I think, in the last couple of weeks. Amazon, obviously one of the best businesses in the world right now. It's amazing what Bezos is able to do. I was thinking the other day, how many ways do I give Amazon money? Well, I have an Audible subscription. I buy books on Amazon. I shop at Whole Foods occasionally. The ways that they're able to generate money, the diversity of paths to income for Amazon is quite impressive. I just downloaded the app Amazon Unlimited, which is a music streaming service. So, it's an awesome company. Obviously, 16 super investors own it. It's expensive. The lowest earnings yield of any company on here that has an earnings yield, and 143 price to earnings ratio. So, there's a write-up from March of 2020, only 4 months ago, and the stock was at $17.85. Now it's approaching $3,000. So just a massive bull run in the last couple months for Amazon. Way too expensive for my wallet. Apple. What can I say about Apple? Price to earnings 30. This is quite a bit higher than Apple has been historically over the last 10 years or so. It's funny, I remember when Apple, maybe a year and a half ago, before Warren Buffett bought it, I saw it in the Magic Formula screener. Okay, I think the earnings yield on it was like 15% or something. So it's just interesting to notice how, when something is cheap, nobody wants it. Like nobody was interested in Apple back when it was cheap, right? And of course now that it's about the most expensive it's been in a decade, everybody wants to own it. So it's just interesting to observe that market psychology. 11 super investors own Apple. And it's a great business, obviously. Very high return on invested capital. I will buy Apple if it comes down quite a bit. Boxel, an education technology company. Now, this is a play on, people having to stay at home, students not being able to go back to school. So this is people betting on, these really small company that has a lot of potential growth if there's, if education from home really takes off, which it seems quite likely to do. So this is just $100 million market cap company here. It doesn't check any of my boxes. So, as interesting as the storyline is, as obvious as, this area of educating at home has so much growth potential, I need some of these boxes to start being checked before I get interested. And if that means, it's a $10 billion company before it fits any of my boxes, I'm okay. I'm okay buying it at 10 billion if it's a compelling investment at that point. I don't need to get in right at the beginning. And I think a lot of people have that mindset. They have this FOMO where, and I see it a lot in these electric vehicle startups. Fortunately, there aren't any here this week, But in the last couple of weeks, there's just so many people getting excited about, Neo and Nikola, Workhorse, these kind of electric vehicle startups, because they missed out on Tesla. You guys have got to strike FOMO as much as humanly possible from making investment decisions. It's just going to destroy your investment process if you get FOMO involved. So that's that one. UAVS. So this is a play on unmanned aerial drones that collect data for farmers, big agribusiness. Very small company, again, $100 million market cap. Kind of an interesting, area to operate in unmanned aerial drones for ag. But, like I said, it doesn't check any of my boxes, so I'm not interested. Every technology solutions for casino and gaming. Now, this one was interesting because it does have a write-up in Value Investors Club. And the write-up was done at a substantially higher price than it is now, which is compelling. So, honestly, if I were to consider buying any of these 10 stocks that are really trending with investors on Robinhood right now, this is the one that I would dive deeper into. It doesn't check any of these boxes, but it checks this box, which means at least one smart investor has looked at this company and said, all right, at $8.80, this business is a compelling investment to me. And, in that write-up, they basically say, projected price for this is somewhere between $13 and $18.75 within the next year. So at $5.75, that gives substantial room for upside if you believe kind of all the assumptions that went into that investment thesis. So, that one might be worth taking a look at. And then, of course, Microsoft, 34 price to earnings ratio, 21 super investors own this. It might be the stock that the most number of super investors own. It wouldn't surprise me if that were Microsoft. 21 super investors. Now, earnings yield, it's even lower than Apple. There is a write-up from August 2018 at $108 per share. There was a bull thesis on it. Obviously, it's gone up almost 2 times in the last 2 years. So perhaps that investor is no longer bullish on Microsoft. Perhaps they are. But for me, it's just way too expensive. Personally, I like to see price to earnings ratios below 10. Okay. So anything 30, 34, 89, it's just, it's not compelling to me at all. Anything else to say about that? Obviously a great business, over 20% return on invested capital. That's average over the last 10 years. Microsoft is a great business. Like I said, a great business is not a great investment at any price. So that's all I got, guys. Tesla, fascinating story. Everybody is talking about Tesla. It's not going to be a happy ride, I think, for people who are getting into Tesla at $1,500 per share. I think we've got a lot of volatility ahead, mostly towards the downside for Tesla, in my opinion. Of course, I'm not going to short Tesla. Shorting is silly, in my opinion. It's just the asymmetric upside to downside simply isn't there when you short stocks. And then, like I said, this could be worth looking into as an interesting value investment play. So that's all I got, guys. The 10 most popular stocks on Robinhood. Let me know if you guys are buying any of these, and what's compelling you to buy whichever of these you're buying. Be fun to get into a discussion about that in the comments. All right, guys, I will let you go, and I will see you in the next video. Take care.